All right, continuing with our financial statements, we had prepare all journal entries and record the information for 2021. Also prepare any necessary adjusting entries. On January 1st, cash was debited and bonds payable was credited, both for $500,000. On January 1st, a transaction took place, but no entry was required in the general journal. On January 15th, dividends payable was debited and cash was credited, both for $25,000. On February 1st, treasury stock and cash were debited and credited for $370,000. On February 1st as well, we had interest expense debited for $13,750. Interest payable was also debited for $151,250. Cash was credited for $165,000. April 10th, cash was debited for $120,000. Loss on sale of trading securities was debited for $80,000. Market adjustment trading securities was debited for $200,000, and then investments trading securities was credited for $1,400,000. On July 1st, interest expense and cash were debited and credited respectively for $20,000. October 1st, we had interest expense and bonds payable, both debited. Interest expense for $10,000, bonds payable for $500,000. Gain on retirement of bonds and cash were both credited for $40,000 and $470,000. November 20th, dividends and dividends payable were both debited and credited for $36,000. December 31st, starting December 31st, entries, we had interest expense for $9,510. Lease liability was also debited for $20,490. Cash was credited for $30,000. Also on December 31st, and as with all the following journal entries, depreciation expense was debited for $26,500. Accumulated depreciation for building was credited for $26,500. We had accumulated depreciation on building debited for $46,500. Loss on impairment of building debited as well for $178,500. Building was credited for $225,000. December 31st, again, we had unrealized increase in value of available for sale securities, equity, and that was debited for $450,000. And market adjustment for said available for sale security was credited for $450,000. And then we had accounts receivable and sales debited and credited for $1,700,000. Cost of goods sold and inventory were debited and credited for $800,000. Cash and accounts receivable were debited and credited for $1,430,000. And then inventory and accounts payable were debited and credited for $900,000. Accounts payable and cash were debited and credited for $880,000. And then now we get into the adjusting entries. Depreciation expense was debited $22,750 or $45, and then accumulated depreciation on equipment was credited for $22,745. And then interest expense was debited for $151,250, and then interest payable was debited or credited for $151,250. And that is all for the general journal and the adjusting entries for the year ended December 31st, 2021. All right, and now we have the beginning for the year and final trial balance as of December 31st, 2021 for our McAdden Company. And in the interest of time, I'm only going to narrate the final trial balance. Excuse me, hiccuped. And so for cash, we had cash was a debit or in debit for $1,530,000. Accounts receivable was debited for $700,000. Inventory was debited as well for $170,000. Investment trading securities was not included in the final trial balance. Neither was market adjustment for trading securities. Investment available for sale securities was debited for $1,050,000, and market adjustment for available for sale securities was credited for $150,000. Leased equipment was debited for $113,724, and accumulated depreciation on equipment was credited for $45,490. Building was debited for $325,000. Accumulated depreciation on building was not included in the final trial balance. Accounts payable was credited for $40,000. Interest payable was credited for $151,250. Dividends payable was credited for $36,000. Notes payable was credited for $1,500,000. Lease liability was credited for $74,606. Common stock was credited for $100,000. Paid-in capital excess of par was credited for $1,900,000. Retained earnings was $19,633 for the year, or final. My bad. Unrealized increase was $150,000. Treasury stock was that unrealized increase was debited. Treasury stock was debited for $370,000. Dividends was debited for $36,000. Sales was credited for $1,700,000. Cost of goods sold was debited for $800,000. Interest expense was debited for $204,510. Depreciation expense was debited as well for $49,245. Unrealized loss on trading securities was also not included. Loss on sale of trading securities was debited for $80,000. Loss on impairment of building was debited for $178,500. And gain on retirement of bonds was $40,000. And the total balance for the final total balance was $5,700,000. Wait, hold on. Excuse me, I'm going to cut this out. $5,756,978. Okay, continuing on, we have our income statement for the year for the year ended December 31st, 2021. We had an increase on sales of $1,700,000, and our cost of goods sold was a subtraction of $80,000. That left our gross profit from sales at $900,000. Excuse me. Now moving on to our operating expenses, we had interest expense at $204,510, and then depreciation expense was $49,245, and that totaled $253,745. So our operating income was $646,246, and then moving on to our other expenses and other revenues and expenses, we had a loss on sale of trading securities for $80,000, loss on impairment of building for $178,500, and our gain on retirement of bonds was $40,000. So that left us at a total of $218,500 for other revenues and expenses, and that left our net income at $427,746. Moving on to our balance sheet for December 31st, 2021. Our current assets were cash, which was, Next, we have our balance sheet for December 31st, 2021. Cash we had at $1,530,000. Accounts receivable was $700,000. Inventory was $170,000, and that left our total current assets at $2,400,000. Now on to our long-term investments. Investments available for sale securities was $1,050,000, and then subtract the market adjustment available for sale securities, $150,000, which left us at $900,000. Now to our plant assets and equipment. Our leased equipment was $113,724, and then we subtract accumulated depreciation on equipment, and that totaled $45,490, which left us at $68,234. Building our building was valued at $325,000, and that left the total at the accumulated depreciation for that building was $325,000. Our total plant assets and equipment, $393,234, and that left our total assets at $3,693,234. Our liabilities. Moving on to our liabilities. Our current liabilities included accounts payable for $40,000. Our interest payable at $151,250, dividends payable at $36,000, and that meant our total current liabilities were $227,250. Now on to our long-term liabilities. Notes payable was at $1,500,000, and our lease liability was at $74,606. Our total long-term liabilities were $1,574,606. That meant our total liabilities were $1,801,856. Stockholders' equity. Moving on to stockholders' equity. Our common stock, which was at a $1 par, left us. Was an error. Left us at $100,000, I believe. Paid in capital in excess of par was at $1,900,000. Retained earnings were $411,378. Unrealized decrease was subtracted for $150,000. Less treasury stock was obviously subtracted for $370,000. Our total stockholders' equity was $1,891,378. Total liabilities and stockholders' equity was $3,693,243 for December 31st, 2021. Okay, now finally we have our statement of cash flows, direct and indirect. We'll start with indirect for December 31st, 2021. So our cash flows from operating activities were cash received from customers, and that was at $430,000. Cash paid for inventory was obviously subtracted, and that was at $170,000. Cash paid for salaries also subtracted, $151,250. Cash paid for interest, $204,510. And then our cash paid for other operating expenses was $150,000. So then our net cash provided by operating activities was $754,240. Cash flows from investing activities included purchase of property, which was subtracted, obviously, for $325. Purchase of equipment also subtracted was $113,724, and that equaled out to $438,724. Now our cash flows from financing activities were payments on long-term debt, and that was all. And it totaled up to $460,000. And so obviously our net cash used by financing activities was $460,000, since it was the only account, or the only payment. And our net increase/decrease in cash was a decrease of $144,484. Our ending cash balance was $1,548,992. Now moving on to our indirect cash flow, we had our cash flows from operating activities included net income, which was $427,746, and then the income statement items not affecting cash were depreciation expense of $253,754, gain on retirement of bonds $40,000, and then our changes in current assets and liabilities was an increase in accounts receivable of $270,000, increase in inventory of $880,000, and an increase in accounts payable, which was actually a decrease in accounts payable of $20,000. Net cash provided by the operating activities was $1,343,992. And our cash flows from investing activities included cash received from sale of trading securities, which was $1,120,000, and our cash paid for trading securities was $1,400,000. So we had a net decrease of net cash used in investing activities, and that was $280,000. Cash flows from our financing activities included cash paid to retire bonds payable, which was $460,000, and our cash paid for dividends was $25,000. So in total, we used $485,000 in financing activities, and that brought our cash balance to $1,548,992. Our total assets turnover was 0.45. Our total assets turnover ratio and it was 0.45, and our debt to equity ratio was 0.95, and that is all.